What's going on, guys? Guess who's back with another live stream today? Live market commentary over NQ, boys and girls. So, yes, sir. We're going to have a quick analysis on the high time frame, and then go back to low time frame. So, I hope you guys enjoy it. It's 9:29, so 1 minute until the open. So let's have a quick analysis. High time frame is bullish. We got to consider today is Friday, so we can't anticipate a TGIF, okay, where we retrace back down into the weekly range. Okay, so what I'm looking at is these relatively equal highs. So bias is still bullish. I mean, we already met the target for today, and the target for this week was these relatively equal highs. Took him out yesterday, so technically we reached our weekly expansion bias target, whatever. So what I'm grading now is how we use this range. If we can close above the midpoint, that's likely or indicative for higher prices. Okay, for a continuation high above this high and maybe these highs, but we definitely got to look at this volume imbalance right here. Okay, so that's the next target, these highs and these volume imbalances in here. Okay, so bias is bullish. If we go back to the 4-hour chart, you can see we got supported by down close candles, so order flow is bullish, as you can see on the 1-hour chart as well. So we kind of created relatively equal lows down in here, but I mean, yeah, relatively equal down lows down in here. I mean, if we expect TGIF, then let's go back to daily real quick, and we can see draw like this. So if we look at TGIF, then TGIF 20 to 30% retracement would actually be below in here. So that's actually a nice draw in my opinion. I mean, yeah, high time frame bias is bullish, so technically you want to have a long or aim for a long, but since it's Friday and we can expect a retracement, which is reasonable after this bullish week so far, and yeah, we can expect a deeper retracement. Now TGIF is anchored at this high, expecting this to be the high of the day. To be honest, you cannot be certain that it stays, that one stays the high of the day. We can actually go even higher, and then we need to adjust our TGIF level. Usually the high of the day forms somewhere in between like 1 p.m, somewhere around lunch macro or the beginning of the PM session. So yeah, technically relatively equal lows down in here, so that's actually reasonable to expect. Looking at the 15-minute chart, 5-minute chart, you can see lots of sell-side liquidity pools stacked in here, and this relatively equal low. Okay, so I mean, yeah, we gotta see what we get. Okay, so for now we have 9:30 opening right around in here, and yeah, I mean, do we have an opening range gap? Not really. It's tiny. So no, it's not tiny, but it's not too big. So let's see. So it's always a little bit more difficult to trade if your weekly target is met, because then it's more likely for the market to, you know, get into some kind of consolidation. I mean, your target is met, so what do you want to, know, what do you want more from the market than, hitting your target? And then you just gotta be, you shouldn't be greedy and be content. So it's Friday, everything happens on Thursday, so that it could be just like a narrow range type day where we maybe see a little retracement or just do nothing. I mean, we can also expand higher. That could happen as well. And then we see TGIF form on the next Monday. But yeah, we gotta see and weigh and see, yeah, what information the market is going to give us. If we can take out relatively equal lows first, which we are approaching right now. I mean, yeah, we had pre-market relatively equal lows, highs. Then we took out relatively equal highs. So next target would be downside. Yes, sir. Relatively equal lows taken. Now we gotta see what the market is going to give us. We have beautiful sell side down in here. So this is insane liquidity resting, residing but below here. And I mean, yeah, relatively equal lows here, here, and these ones. So we have lots of sell side liquidity, which is also in agreement with TGIF levels. So yeah, let's see. We got a way out. So first present for value gap. Kind of favoring these relatively equal lows and sell side in general right now. So these are our sell side targets. And let's see if we can stay below this first present for value gap. We have done enough damage on the buy side in here. Okay, so we are kind of ready to go lower. So let me check actually if the audio is fine. Okay, I guess audio should be fine. Should be fine. Okay. So I want to see retracement. First present fair value gap. It should act as a bearish fair value gap and be used as its first utilization. So we have a bearish fair value gap. So I want to see price respect the first percent for value gap. Are there any news expected for today? We have 10 a.m. news. Okay. Oh, that would be the tick entry right there. Sniper entry. The reason why I didn't take this trade is it's just not my model, and I want to stick to my model since I'm in drawdown right now. I want to trade something that looks familiar, and this is nothing that looks familiar to me. It's a valid trade idea, but it's nothing that I have seen over and over and over and over again. So technically, the technical, it has all technicals behind it. We have taken our relatively equal highs, traded lower, first and value gap, sell side liquidity, and midnight down in here. So it's a valid trade idea, but like I said, it's not. So far, it's respecting this one as an auto block, and this one as well. So it's not looking too bearish right now. Why? Because if it's bearish, it should actually come back up into first percent for value gap, and then reject lower. So now it's spending 1, 2, 3 candles inside that first percent for value gap, and you don't want to see price spend much time inside for value gaps. Now we have this bullish order block, and we have this bearish order block. Okay, so now you should if it's bullish, it should disrespect this order block right here. As you can see, price also respected this first percent for value gaps high. So far we have a close below it, and if we can see a closure above it and then price come back down into it, that's actually a valid long. And I think we can take them. The question is, what's the target? So I'm just doing projections to see what is the valid target on the upside. You can even aim for this one right here. Price comes back down. So, in my opinion, it would be a valid long if we would not have taken out this buy side. Okay, so we took out buy side and then retrace. I would have preferred price to just trade and close above the first percent fair value gap and then come back down into it. You can still deliver long, but yeah, it's nothing that I would take right now, to be honest. But yeah, like I said, it's a valid trade idea. So problem is we don't really have a target on buy side. That was an initial trade that we were looking for. Now it's a macro. So the problem is why I'm hesitating is I can argue both sides. Okay, I can argue price going higher, but also I can see price going lower with these relatively equal lows all the way down here. So when you can argue both sides, it's just not really high probability. It can pan out, and if it does, okay, I don't care. But you know, like I said, I can argue a long and a short. So that's usually not indicative for high probability. We have an auto block in here and an auto block in here. Taking out buy side. Respecting the auto block in here. Let's see, what is ES doing? Yes, also manipulated downside. And it's moving higher. Dow as well. So it kind of starts consolidating right now. It is respecting bullish PD arrays, but it doesn't take off. Usually, it's the same thing with fair value gaps. Okay, you want to see price get inside in the fair value gap and then reject lower. Now we came back down into this auto block, but we don't rally higher. We are just kind of stalling, and you know it's taking too much time. So that's why I don't like it. And bias is not clear for me, at least right now. Okay, so auto block in here, price traded lower. What is the lowest wick? It's this one right here, okay? So if price wants to go higher, it should respect its midpoint. The midpoint of this wick and this first value gap. And look at this. Look, that's beautiful. Wick towards the midpoint, and look where the body's close. Okay, it looks bullish. It looks bullish so far. we're also respecting the opening range gap. So if you look at RTH, okay, as you can see in the right hand side on the corner. I know you can see it, and you cannot see it on the screen on the live stream. Look at your charts. You have this gap. Okay, if you grade this gap, you can see prices respecting it. Okay, so let's go back. Look at the wicks. Okay, so bodies tell a story. The wicks do the damage. So far, it looks bullish. But like I said, we don't have a target on the buy side. At least not intraday. We don't have nothing looking left. No buy side or whatever. And we've taken our relatively cool highs. So while we can technically go higher, yeah, like I said, we gotta consider it's Friday, TGIF. We already met the target for the week. So this looks, yeah, like I said, we can. I argue it looks like bullish. It's following bullish order flow since 9:30 opening so far, respecting this one first and favoritic and respecting the wick. Yeah, we kind of engineered relatively equal highs, but I mean we have midnight and we have relatively equal lows down in here. Then you could argue, yeah, we've had relatively equal lows down in here, but we already took out sell side. Yeah, you're right. You can argue this as well. So yeah, see, we can argue both sides. You know what I'm talking about? So it's not high probability. So as we can see, we kind of entered consolidation. So be patient. See how we are respecting the midpoint of that wick. We only get bodies into this wick. We only get wicks into this wick midpoint. The bodies stay above this first present favoritic, and that in of itself is looking really bullish. So I guess it's the high and the low of the first 30 minutes, so we can grade it and use it as, you know, projections if it breaks out to the buy side. But now we've disrespected this midpoint wick and this first percent favoritic gap. So now we want to see price use it as a reclaim bearish favoritic gap. If it closes below this first percent favoritic gap and then closes above it again, then to be honest, I'm not really interested in today's New York session because that just shows me manipulation and that price is being manually intervened right now. So if you are like a beginner trader, I would not recommend you to trade in the first 30 minutes. Okay, we are also expecting 10 a.m. news, but despite of the 10 a.m. news, if you are a beginner, don't trade the beginning of the session, 9:30 to 10 a.m. because there are lots of things to weigh out. Okay, you could have seen this as a short as I was outlining in the beginning, but like I said, we are kind of 50-50, so I didn't take that short. I would have gotten stopped out. Now then I said, yeah, you could argue a long in here, but it's Friday TGIF and we have relatively equal lows, so you can argue both sides again. So I didn't took that long in here. So there are lots of things you gotta weigh out. So that doesn't make it. it does makes it easier for a beginner traders. So it's easier to trade when you have more information. When do you have more information? Obviously, when you wait, and when you rather trade towards the end of the New York session rather than the beginning. Okay, because towards 10:30 you have the first hour of trading and the biggest volatility already came in, so you are less likely to get trapped into a manipulation leg or consolidation stuff. So okay, so we traded higher, respected this wicks midpoint and the first presented fair value gap. So now it should follow bearish order flow and not close above it again. Like I said, if it closes above it again, then yeah, that's indicative for a market that is on purpose being held in a narrow range. Yeah. Ciao, ciao. Tschüss. That was my aunt. Ah. Difficult. And that's why you shouldn't be greedy. We already met the weekly range target, which is relatively equal highs on a daily chart. Okay, already met it. So we are more likely to get stuck and caught up in a consolidation. And that's what I said in the beginning. And what's happening right now? High resistance. Okay? And you don't want to be part of high resistance. I mean, it makes your life way more difficult. And yeah. Why make it difficult when it can be easy? Crazy manipulation right now. 10 a.m. news. Done right now. Yeah, I think TJF might be waiting for us below these lows. We'll see. So we will either get a trade after 10:30 or yeah. I think a 10 to 11 a.m. silver bullet is not the way to go in this New York session. trade it back down into the first presented order block. Okay. So if you would have taken this long in here that I was drawing up in the beginning, we would still be in a trade. And we could aim for now first 30 minutes of trading is done. So we can grade this range and put on projections. And this is something you could aim for. So let's see. Crazy high resistance. Auto block in here. First one for value gap. Oh my days. can imagine, lots of people got chopped up today, and it is not easy. Let me tell you that it's not easy. Damn. Lots of people get chopped up today. Difficult, very, very, very difficult. I mean, these are like leg days. These trading days are just leg days in the gym. It's just very, very difficult. You know, it's hard, but you gotta get the reps in, okay? Because these type of sessions give you the biggest growth, okay? The hardest sessions are going to give you the biggest growth potential. And same thing in gym, same thing in the charts, okay? So learn your lesson and dig through it, okay? Ah, Horrible price action. Horrible. So that's it's previous day's high in here. As you can see, traded it back up into previous day's high. Tried to trade up once more. Got rejected off of this rejection block in here. Highest don't close candle, closing price. And move lower, respecting this suspension block. Here. Trash ass day. So trade back down, 1% Fair value gap. Try to trade higher, respected 1% Fair value gap. Traded lower, traded back up into it, respect the midpoint, and then move lower. So it seems like price is now not being manipulated anymore, since it's using the levels again. Look at here, it is just going back and forth, back and forth, back and forth. Not really respecting it here. So now it seems like it's been following the script again. I would take a trade on. If we can get it close below this fair value gap, then it becomes a breaker. Okay. Yeah. Okay. Seems like that's the high of the day. So TGIF, 20% retracement would be down in here. And 30% retracement would be even further down the line here. Okay, in between are these relatively equal lows. So these are looking pretty good in here, and this as well. Okay, so let's see if price can reach down for the sell side liquidity pools down here. about it. Breaker in here. Breaker midpoint. If it wants to go lower, it should respect this fair value gap and the midpoint. That's enough. Institution order flow entry deal. Go lower. That's what you would expect in lower resistance liquidity run conditions. We had high resistance. I'm not trying to pick the point in time where we just leave high resistance, but that would be a low resistance liquidity run condition type short opportunity, because we have a breaker, we have a fair value gap, and bias is bearish. These relatively equal lows down here, but we already also reached down into 12 a.m. midnight opening price. So yeah, low probability and nothing that I will take a trade on. So difficult day, difficult market environment. Well, like I said, it's lag day, okay. We don't want to skip lag day. Fun fact, if you didn't know, lags, because it's the biggest muscle in your body, it produces the biggest amount of testosterone after being stimulated. So if you train legs, if you hit lag day, your body will produce the biggest amount of testosterone after lag day, and this also compounds and supports your arm and shoulders and whatever days. So don't skip leg day. It's beneficial also for building your upper body. Institutional order flow entry drill. Lows in play, and these lows. Let's see if we can take out these lows, then I think I will end the session and call it a day. Glad that we didn't get chopped up in this price action right here. It's pretty goddamn hot. Bro, it's like 35 degrees outside right now. Insane. Yeah, it's really 35. It's really thick. I could turn on the AC. Damn, is it hot? Damn it. So sell side is in striking distance. 12 a.m. midnight opening price delivered. So that's actually enough. But next target would be 20% retracement level. We are in close proximity. If we are in close proximity to TJF, 20% retracement into the weekly range. auto block in here. Try to back up into auto block. So should stay heavy in here. And go lower. TGIF 20% retracement level is right here. So it's in between this sell side and this sell side. It's stalling. It reached down into the 12 a.m. midnight opening price. So that's actually enough. But like I said, next target TJF and sell side down here. But yeah, I guess folks, I mean that's it for today. There's nothing for me personally that is of interest. So we come back tomorrow. Tomorrow, I mean on Monday. Let's actually see. What do we have on Monday? Monday next week. What's the news for next week? We have FOMC on Wednesday. Yeah, that's it. Oh, Thursday, Philly Fed. Whenever you see something with Fed, bro, take the day off, or at least don't trade before the Fed news. So Wednesday and Thursday next week could be kind of like, you know, high resistance type shit. But apart from that, yeah, no news Monday. I mean, we have FOMC. I think the most beautiful price runs we're going to see next week on Friday and Thursday after 8:30. Monday and Tuesday could be kind of whack because of Wednesday FOMC. But yeah, we'll see. We'll see. We're going to be back on live stream on Monday. And I would say I catch you on Monday. Sell side delivered. 20% retracement on TGIF level delivered with this run. Perfect. TGIF delivered. Difficult morning session. But yeah, we got through it. Stayed solvent. Preserved capital. And yeah, I would say let's see each other on Monday. So have a nice weekend, enjoy your weekend, be safe, and Lord willing, until Monday. Goodbye, guys.